Hi, you're watching ET Markets Live. Welcome to ET Commodity Talk, where every Monday we discuss precious metals and commodities. I'm Neha Vashisht Mahajan, and today I'm here with Mr. Anindya Banerjee. He is the Senior VP, Head of Research, Currency, Commodity, and Interest Rates at Kotak Securities. Thank you so much, Anindya, for taking out time and joining us today on ET Markets live stream.
Thank you for having me. A very good afternoon to all of you.
So let's quickly start our session for today and let's start with the oil first. Brent crude has surged about 13% in the last 10 days due to the Iran-Israel conflict. Now, on top of it, US also attacked the new bases like Fordow, Natanz, and Esfahan in Iran. What are your near-term and one-month projections for crude oil prices? And I also want to talk about what Goldman Sachs is saying. Goldman is saying that it could also touch $110 in the near term. So, what is your take on that?
Yes. I would say I would uh, break the impact into two parts. First of all,
Hmm.
short term, it is definitely positive for oil because it creates an escalatory ladder, and that accordingly, the geopolitical risk premium can push higher the oil prices higher. I'll come to the why it is so. And on
Sure.
if I take a more medium to long term look at the oil market, then it is quite negative because once this conflict or the war actually is solved and peace comes back, you could actually see the geopolitical risk premium which was hanging on oil for a very long time. That will be
Mhm.
largely gone from West Asia, and that can be a long-term negative because the global situation in oil is that the supplies are more, the demand due to various reasons, due to substitution and others, is not coming through. Now, coming to the short term, so the biggest risk is the Straits of Hormuz, because that
Mhm.
small patch of water which connects the Arabian Sea to the Persian Gulf, that is a transit point for nearly 20% of the global oil supplies from Saudi, from UAE, from Qatar, from Oman, from Iraq, all these places, and also Iran. Now, if that particular transit point becomes a choke point, because it this risk has been there for a long time, then what
Mhm.
can happen is the oil prices can rise significantly. Because if we see in 2022 when Ukraine and Russia war erupted, the oil price went from $60 to almost $140 on Brent. Now, why did that happen?
Mhm.
Because Russia was supplying or still is supplying 12% of the total global oil supplies. Compared that to Iran, that's roughly around 1.5 to 2%. So Iran is not as significant as Russia, and that's the reason why oil prices are still under 80. But if Straits of Hormuz comes into play, that equation changes drastically. Suddenly, from 1 to 2, it becomes 10 times more. That is 20%,
Mhm.
and then the oil prices can shoot up quite significantly, and because that fleet operators would pull out and all that. So that is the biggest risk, upside risk for oil prices over the short term.
All right. What can we expect if crude oil crosses $100 mark? How significant is that mark right now?
See, as far as its ramifications goes, for the energy importers like India, it is negative because it will straight away increase our import, the oil import bill.
Hmm.
But it also depends on what kind of price discounts we get, because the Russian situation in 2022 was different because it was they had sanctions, and India was playing a pivotal role. So this time around, if there is a spike in oil prices towards 100 or above due to Hormuz, if it happens, then yes, it will have a negative impact on the Indian assets, the bonds, currency, and to a certain extent the equity markets as well. So yes,
Okay.
so, that will be the impact, because all the energy importers will be adversely impacted. All the energy exporters will be
Hmm.
positively impacted, provided they are not in the Hormuz choke point.
All right. Let's also talk about the bullion now. Gold is hovering near $3,370 right now, and it has hiked a lot in June also. How much more upside is left purely due to the geopolitical risk right now? What do you expect in terms of gold? And along with that, let's also discuss the levels for gold for this week.
Right. So I would say the current price around 3355 if I take the spot levels in dollar terms, and around 99,000 on the MCX. Now, I would say that the geopolitical risk premium is there, but it's not significant
Hmm.
because it's currently at the levels where it was when uh, on the day when Israel attacked Iran. So it has almost erased the entire rally which happened after that towards almost towards uh, 3460 levels. But gold, what we have seen historically is it has not been a great hedge against geopolitical events, even in 2022
Hmm.
when the Russian episode happened, because the geopolitical risks tend to have a very fleeting impact on gold prices. Gold is the upside in gold is much more sustainable when it is due to financial reasons like a central bank allocation towards gold and all those factors, or dollar devaluation, or
Hmm.
dollar depreciation, all those factors. So that is the short term theme. Geopolitical impact will be there, but I don't think it will be sustainable. Now, coming to the price outlook over the short term is gold is looking a bit weak, because the reason
Okay.
being the US dollar has strengthened against several currencies, including the Indian rupee, over the past 1 week or so. Now, that has reduced the appeal for gold from the speculators. The central banks continue to allocate their FX reserves towards gold, and we are seeing constantly a shift away from the US dollar towards the gold, where now the gold is the second largest. If I say gold is a currency, then the second largest currency of the central banks after the US dollar, replacing the euro. Now that is
Hmm.
significant. So that kind of a long-term shift will not go away, because even in my even in our past interactions, I've been saying that the de-dollarization is the long-term theme. So the
Okay.
dependence on the US dollar is reducing, and that will continue to be supportive for gold. But that's a long-term play. Short-term, the speculative flows play a role, and that is largely dictated by dollar. If dollar is
Hmm.
weak, yeah, we see a lot of flows, like it was the case uh, till April. If dollar is strong, then we see some selling from the speculators. So right now, gold is looking a week to range bound. If I take the international price as a reference, I would say 30 to 80 on the down, and on the
Hmm.
upside 3440. This will be the range, because gold needs a time correction. It had a fantastic run, 30-35% run between November of last year and April of this year. Such a big move, it needs that time consolidation, and we are in that consolidation. So I think this consolidation will continue. On MCX, we are getting a benefit of a weaker rupee, because the Indian
Hmm.
rupee is close to 87, and that's the reason why it's above 99,000, almost a lakh. So we could again see a consolidation here between let's say 97,000 on the down, which is an accumulation level for investors, and 1 lakh one on the up. So this will again be a let's say 1 to 2 months of consolidation. Then we can see higher prices.
All right. What's your take on central banks being the net buyers of gold recently? And do you think that this trend will continue in the second half of 2025 as well?
Right. As I said, that the central bank demand for gold is more structural, because they are reducing their dependence on the US dollar, and they are looking for an alternative. And naturally, that anchor is gold. Historically, it has been that till 1971 when the dollarization happened. Now, that trend will continue. And the recent survey was done by the World Gold Council. I think the report was out a couple of days back, and it clearly was a sign that the central banks would continue to allocate more of their FX reserves towards gold. And the trade war will actually enable that, because it creates
Hmm.
uncertainty around the US dollar and the US financial system and the whole US trade system. So that will be a biggest supportive factor for the gold over the next 6 months and more.
All right. Let's also talk about the Indian rupee and the bonds. Indian rupee and government bonds are facing pressure this week and last week also. How exposed is India to higher oil imports in terms of the trade deficits, and what is going on in terms of rupee?
Right. See, Indian rupee right now over the last 1 month or so, or I would say 2 weeks, two factors
Hmm.
have actually acted as a headwind. One, the oil prices, yes. Second, FPI outflows. So both the oil demand and the FPI outflows have actually increased the demand for dollars and supply of rupees. And that is a short-term negative because it creates
Hmm.
vulnerability. But RBI will be there in the market to ensure that volatility is not too much. But 87 is a very critical level. If that breaks, then we could see. But see, that won't break in isolation. It will break if the oil prices take off above $80. Because, as I said, right now, Hormuz is a threat. But it's
Hmm.
it not materialize. If it materializes, oil prices can head towards 100 or above. In that case, Indian rupee can head towards a fresh low against the US dollar and head towards levels of 89 or even 90.
Hmm. All right.
So,
Let's also talk about the Middle East conflict a little bit more in terms of commodities. What commodities do you expect to outperform in Q3 if the conflict, deepens further, especially when we're talking about crude oil, gold, or maybe agri?
right. See, when the oil prices rise, it has a impact on the entire value chain. So
Hmm.
you see an impact on the chemical prices, especially the petrochemical prices, and fertilizer prices, because fertilizer prices tend to rise. So that can have now how far will that translate into higher agri prices will depend on the demand and supply situation on the ground. The
Hmm.
monsoons as of now looks like we'll have a good monsoon, so the supply issues may not be there in a big way. But as far as the input cost is concerned, for the agri sector, we could see a rise because oil prices would have a positive impact on the fertilizer prices. So and as far as the other commodities are concerned, copper looks quite promising because actually that market is still in a deficit, and that
Hmm.
can continue to do well. Silver looks promising because silver is a dual play on both gold and copper, because it's an industrial metal as well as kind of money. So I
Yeah.
would say if I have to pick one commodity for the next 3 to 4 months, then it could be silver.
All right. What are the events that we need to keep an eye on right now, considering the global turmoil that's going on, that is important for commodities right now?
See, one is the Fed meeting, of course, because the US interest rates will play a big impact. But apart from that, the two other events are important. One, as we approach July 4th, the Trump deadline will come to an end on the trade,
Hmm.
or if we say the trade ceasefire. What happens to that deadline? We have to see whether America starts again imposing higher tariffs on countries. So that will be an important event to watch in July. And third, of course, what's happening in the Straits of Hormuz, or what's happening around the Iran-Israel conflict. If that escalates, then it can have a positive impact on oil and other commodities, but a negative
Okay.
impact on the Indian currency and the financial markets.
All right. Now, before we close, let's also talk about what should retail investors do in terms of gold specifically. Should they invest right now, or should they wait for dip? And this is in terms of digital as well as physical gold. What is your take on that?
See, gold, the medium to long term aspect of gold, or the prospect for gold is quite positive. So when we get these
Mm.
corrections, like it is now happening, a time correction and a price correction, this is an opportunity to accumulate. As far as the levels are concerned, I would say anything below 98,000 is a place where the investor can get in and accumulate. But somebody with a higher risk appetite, he can allocate more towards silver. Now, how to
Mm.
invest? There are a number of avenues. The physical avenue is there. Then we have the derivatives avenue like MCX or the NSE, and we also have the ETFs. Which one would be more suitable? That depends on the investor's risk preference. But these are all
Yeah.
three major avenues through which they can take participation in the gold and the silver market.
All right. Well, we have reached the end of our segment for today. Thank you so much, Anindya, for taking out time and joining us today on ET Commodity Talk. Thank you, everyone, for joining us.
Thank you.
Thank you.